Ladies and gentlemen, welcome back to the channel. We have earnings out from Tesla, Microsoft, and soon to be Meta here in just a few short moments. I will share with you the numbers, if they're good, if they're bad, what this means for markets. And in case you didn't know, we did have Jerome Powell today that really was, I think, more dovish than expected. Now, it didn't necessarily translate into markets moving materially higher, at least not right now, but I think a lot of that had to do with some nervousness, some wait and see approach being taken by investors in regards to big tech earnings, which so far do not look terrible. So let's go ahead and get into this video. Hit that like button as well as subscribe to the channel, and let's start with Tesla. And again, here you can see the revenue miss. Revenue came in at $25.70 billion versus $27.25 billion, as was the estimate. So a miss of $2 billion there. And gross margins mainly in line with most expectations. So I don't think there was a huge miss there by any means. So Tesla was lower than expected in some areas, but really their commentary around newer, lower priced Teslas coming, Optimus production by the end of this year, larger production of Cybercab by next year, really sounds good. So for now, I think Tesla is okay. Microsoft Q2 results come in with EPS at $3.23, revenue of 69.6, beats the 68.78 billion estimate, net income of 24.1 billion. Operating income of 31.7 billion, tops the 30.28 billion estimate. Now, part of the issue for Microsoft, the reason Microsoft is selling down a little bit here today in after hours, is not the headline EPS or revenue numbers. All of those beat estimates, but it is Azure, which came in at 31% year-over-year growth on a FX neutral basis, that is foreign currency exchange basis, versus 34.1% in Q1. So year-over-year comparisons are slowing growth for Azure, and you did have just slower growth in cloud, and that's not seen as good for Microsoft. Now, AI revenue annual rate up 175% year over year to 13 billion. That is definitely positive. Gross margin came in 1% higher year over year at 69%. Operating margin came in 2% higher on a year-over-year basis at 45%. So both of those things are also good. It's simply just the cloud slowing down, which negatively impacted Microsoft. Microsoft currently down about 1.5%. They don't really give official guidance, though, until the conference call. So there will be another move associated with Microsoft. And Nvidia so far is loving this because Microsoft did not change their guidance for AI CapEx. And if anything, AI revenue was one of the outperforming areas of Microsoft. And I think that does bode well for Nvidia. So that's why you are getting a 1.5%, almost 2% rally in Nvidia shares in after hours trading. Now, you can also see that Meta has not reported earnings yet. It is currently 4:40 p.m. They were scheduled to report earnings at 4:05 p.m. We have no idea what's going on. You have not seen Meta take this long to report earnings in 22 quarters. That is almost 5 years. So it's either going to be really good or really bad. I don't know what the delay is for. I will also share with you what in the world is going on with Nvidia today, down another 5% on fears of government export controls, this time that could be targeting the H200 chips that Nvidia currently sells. There is also news that DeepSeek actually stole IP, that is intellectual property, from OpenAI. I guess OpenAI has been stealing intellectual property for a long time, so what do you really do about it? Not much, but apparently there's lawsuits being filed, and I'm sure nothing will come out of it, but I will share the news with you, because I do think anything regarding DeepSeek is news for markets these days. So first and foremost, Jerome Powell says that we need real progress on inflation or a weak job market to cut. Powell also says that policy is now less restrictive after rate cuts. The Fed focused on inflation progress or labor market weakness before more cuts, and the stance is well calibrated to balance goals. No need for more labor market weakness to hit inflation target, notes two strong inflation readings. Notes that forecasts are highly uncertain, and the sentence on inflation was not meant to send a signal, and that the Fed will patiently watch and understand. Jerome Powell also says that they expect further progress on inflation. And Jerome Powell actually noted the decline in market rents and the follow through to that in PCE that they have seen in the last couple of months. Jerome Powell said that the last couple of months, we've seen progress on inflation. We've seen progress on some of the key components that are keeping inflation high, like rent, which is a good sign. And he goes on to say that while you can't be certain these things are going to continue, it does look like they are going to continue if forecasts are currently met. So some of those things were positive from Powell, but Powell also says it's appropriate we not be in a hurry to make further adjustments. He was specifically asked about this in regards to March, that if a March cut is on the table, and Jerome Powell said, we don't have to hurry to make an assumption. So he did not outright say it's not going to happen, but he did not confirm that that's something that they are currently thinking about. And it really just has to do with the economic data that comes out. Is the economy continuing to be strong? Does inflation make more progress? If inflation makes more progress, a March cut could indeed be on the table. Fed funds futures markets actually responded more bearish, if you will, for March. Current probabilities for a cut are sitting at 22% for March 19th, 2025, 78% chance of a continued pause. But we have to just face the fact we're going to be handicapped to the data. If the data comes in good or bad on inflation, that's going to move the expectations for the Fed. And that is what will determine when and how much the Fed actually cuts rates. And that's one thing that I really took away from Powell today was just that. The big bombshell Jerome Powell, dropped today was this. Powell thinks, or says he thinks, interest rates are meaningfully above neutral. That's not slightly above neutral. That's not way above neutral. That's meaningfully above neutral. Your interpretation is as good as the next guy, but that probably means we're maybe like 1.5%, I would say, above neutral. I think that's what markets kind of got out of this, meaning eventually we will get many more rate cuts. So the rate cut cycle is not over with. And I think that is something the markets, if we do have a good day coming tomorrow, if earnings are good from big tech today, well, I don't think Powell's going to, be the big negative factor that it was the last summary of economic projections and Fed conference, right? December 18th, that was rough afterwards. The markets dropped like 3%. The day of that conference, okay, it was really rough. Well, Powell was more dovish today, and this was one of the more dovish statements that really made markets take notice. I mean, after all, Wall Street's pricing in around a 25% chance the Fed is going to hike rates this year. Not cut rates, but actually raise rates this year. And following a statement like that, it doesn't sound like the Fed's talking about raising rates anytime soon. And that's not what we got out of today's FOMC meeting, right? Maybe a hold, maybe a extended hold if things did not continue to make progress. But it sounds like the Fed is far off of raising rates, and I think that in and of itself is a positive for markets. Jerome Powell also says there is a range of possibilities on what happens with tariffs, and that range is very, very wide. Jerome Powell said that they're basically taking like a median forecast, probably like 10% tariff, something like that, and they're modeling out what different scenarios could look like. And they're doing research right now on how that can impact prices in the economy. Jerome Powell went as far as to say there could be very positive outcomes to this, right? There could be a stronger economy. We may not get inflation. Or there could be a more negative kind of outcome with tariffs, with a slower economy and more inflation, and they just don't know what's going to happen. So they, quote, don't want to be speculating about tariffs until something actually happens and until we know what that could do in the economy. There's not going to be much tariff headlines impacting the Fed's decisions. At least that's what they claim. Jerome Powell says there are lots of places where price increases from tariffs can show up, and that they intend to reduce the size of their balance sheet over time. Jerome Powell also said that long rates have moved up for reasons unrelated to their policy. Jerome Powell specifically said unrelated to the Fed cutting rates or for inflation forecast, or really Fed funds rate forecast over the next 10 years, like mortgage rates and auto loans. They're really moving up for other reasons. While Powell didn't clarify this, but it likely has to do with the deficit. That's more or less what I think Wall Street got out of that. Jerome Powell was also asked if he is nervous or watching equity markets for an asset bubble, and Jerome Powell kind of said there is one. He said asset prices are elevated by many metrics, and he says the Fed is watching AI-driven equity sell-off with interest. I think they were trying to get him to kind of lean towards, if things get worse in markets, that would be a reason to cut rates. Jerome Powell kind of leaned into that for a little bit and then kind of leaned out of that. Didn't say much, in other words, about policy, but that they are watching that closely. Jerome Powell also said that with asset prices being elevated by many metrics, that a lot of that was just around tech and AI. Jerome Powell also says that nothing in the data yet about a decline of immigrant labor, but hear it from businesses. And Jerome Powell says he has had no contact with the president so far. And on crypto, for those of you guys that like a little crypto, Jerome Powell says, we think banks are able to serve customers as long as they manage the risks. And then Powell says for banks engaging in crypto, the threshold is a bit higher, and he specifically referred to Bitcoin. Now, earlier in the day today, Nvidia says it is ready to work with the US administration as it pursues its own approach to AI. And apparently officials held early talks about restricting Nvidia's H200 chip. And Meta considers testing Chinese AI models and its generative AI tools for advertisers, according to the information. Tomorrow morning, we will get the GDP growth rate quarter-over-quarter advanced data for Q4, currently expecting GDP to come in at about 2.6%. Last month, you were at 3.1%, so expecting a slowdown there, and GDP price index quarter-over-quarter expected at 2.5%. Last quarter was 1.9%. That data comes out at 8:30 in the morning, alongside initial jobless claims, expected at 220,000. Last month was 223,000. And you do have an ECB press conference pending home sales month over month and year over year for December. And that looks to be about it for economic data tomorrow. On Friday, you are going to get the personal spending, personal income, and core PCE month over month. Now, that data is expected to come in at about 0.2%. It's actually expected at 0.18%, according to Nick Timmerhouse over on X. So a number like that would definitely be good. That would be pretty much in line with the Fed's 2% target on a 12-month annualized basis. 0.18 times 12 is 2.16%. That's pretty damn close to the Fed's 2% target for PCE at least. About all of this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one. So let me know what you guys think about all of this information down below in the comment section. Ladies and gentlemen, we will be back after the conference call is over with to discuss what is said on the call and to discuss the final move for Tesla stock following that conference call, because you really don't want to jump to any conclusions right now before that conference call, because that's when you get the big move, as I said previously. So, ladies and gentlemen, have a great rest of your day, at least for the next couple of hours, because I will see you in the next one around 8 p.m. Eastern Standard Time tonight. And trust me, you do not want to miss that video.